Thank you. So, about 5 years ago, you had to scream cybersecurity for people to look at you and have some attention. Now you just need to whisper it. That's the change that has come out. Now, the theme of the conference since the morning has been digital, lending, and user protection. But due credence is not given to digital and lending together, digital lending. We've cast as wide a net as possible with digital lending and cybersecurity in the same panel, and that's why we have you. Now, digital lending in itself is going to be $1 trillion AUM within this decade itself. So our focus would be digital lending and cybersecurity framework. Now, taking away from the RBI governor's, deputy governor's remark that digitization should also ensure user protection, RBI has come out with cybersecurity guidelines, with guidelines for digital lending, and within that is the cybersecurity guidelines as well. MeitY will soon come out with cybersecurity guidelines itself, which are the new ones. Ranjit, my first question is to you. Is cybersecurity still a top-down approach in India, or is that changing over time?
Hope I'm audible. Okay. So again, I think interestingly, you pointed out that cybersecurity is not a new phenomena today, right? So if you look at how the landscape has evolved in terms of cybercrime, right? Statistically, we've seen cybercrime today is the largest in terms of monetary value when it comes to a crime. It has far surpassed illegal drug trafficking, which used to be a top, sort of crime that we had previously in the emerging markets. Obviously, a lot of reasons to it. Obviously, because digital adoption has just fast-paced. Primarily, I think over the past 2 years because of COVID, right? And obviously, cyber criminals have been quick to latch onto this. Specifically, when it comes to banking industry, there's so much of valuable information that hackers can have in terms of individual users, right? And I think part of it is also to blame with the end users, right? Because I think privacy is something which is not inbuilt in India, so users are not conscious when they are sharing their personal data, whether it is online or outside. Let's say today you go to a mall and then you're trying to purchase something. If they ask for a mobile number, what would you do? You'll just give it without even asking a question, right? So there's your most important personal data that you're just giving it away just like that, right? Which everyone does, all of us does, most of us, right? Unless you are asking question, why do you really need my mobile number? Is it necessary for you to give that service? So I think that's something which each of us should be consciously asking ourselves. While obviously cyber criminals have been using a lot of sophisticated ways to perpetrate these attacks, but at the same time, we've also made it too easy for them to sort of have access to our data and then use this data to commit a crime against us, right? So when it comes to organizations, obviously, I think given the environment that we are seeing today, not only from a compliance standpoint, I think we also are scheduled to have our own privacy bill soon, right? There'll be a lot more accountability in terms of, protecting the data of their customers. I think banking side, I would say they are much evolved in that perspective. Security is something which is already, I think it's probably the most regulated industry today in India. So from a banking side, I think we've seen a lot of good adoption in terms of security practices. Especially, I think a lot of fintechs have been very nimble, very agile in terms of adopting security, right? Because I think they are well aware that they have to be in the business. At the same time, they also have to ensure security is the most important aspect for them. So I would say top-down approach is definitely preferred. At the same time, the bottom-up approach is where you'll also have to educate the end users. You'll also have to ensure that apart from putting the security practices in place, your customers are also well aware about cybersecurity threats. That will go a long way in ensuring that you're able to mitigate these threats.
Rajshri, that brings me to a question because FIS has been dealing in these issues a lot. What's been the experience of larger organizations? Ranjit just talked about fintechs. What is the best practices that we can draw from larger organizations as far as cybersecurity is concerned?
Sure, Ishan. For those who do not know actually about FIS, we are one of the world's largest fintech. We are actually a 50-year-old organization, so that brings us a very rich legacy in operating across banking, payments, the merchant acquiring segment, and capital markets. So cybersecurity today is a very hot topic in the boardrooms, right? So, yeah, okay, thank you. So a recent study says that financial institutions are 300 times more vulnerable to cyber attacks than any other industry. And the cost of remediating a cyber attack in the financial services industry is 40% more than any other industry. I guess it's a no-brainer because one of the main reasons why a malicious attacker enters our system is for financial gain. And so as the world's largest fintech, right, we have a lot of responsibility to protect our systems, have a more disciplined approach, and hence protect our clients and the end users. So we follow a very disciplined and a global approach. We have a global information security office that provides thought leadership, that provides strategy, that provides direction. In fact, our CSO recently remarked that earlier, he used to meet the board of directors probably once a year for 20 minutes. But now, the amount of interaction that the CISO, right, the Chief Information Security Officer of a large fintech has with the board is 30 minutes every month. So cybersecurity is something that is playing on the minds of everyone. So how does FIS actually handle cybersecurity, or rather the security of our systems? I mean, right from data security to network security, infrastructure, application security, and so on. I would say that our strategy is built on 4 important pillars. The first, we call it as protect. So it is all about protecting our systems, preventing an attack that can happen. And then the next is detect. So again, a study says that it can take a fintech days and weeks to even detect that a breach has happened into their system. So that way, detect is very, very important. How soon can you detect that your firewalls have been breached? There is an intruder in the system that you don't want them to get in. The next is respond and recover. So how are you going to respond? How soon can you recover? The final is communicate, right? It is very, very important to communicate to our customers, to communicate to our investors, to communicate to the regulators, and also communicate to our employees, which is going to be the feedback loop to your prevent pillar. So this is our strategy as a global fintech. We take a top-down approach, as Ranjit just mentioned, and these 4 pillars rest on 3 important foundational aspects: people, process, and technology.
Anuj and Akshay, that much time to detect a cyber threat. Aren't new age enterprises very different? Don't they see cybersecurity as a different approach? You run a neobank, Anuj. So how is that very different from a larger organization?
Yeah. Let me quickly introduce myself first. My name is Anuj. I run a digital bank called Frio. We have savings, spending, and we also run a lending company called MoneyTap. So you can imagine that we have people who deposit money and people who take money out and then they have to give it back. So I don't see any difference between a large company versus a small company. I mean, today the aspiration of so there was a person in the audience who asked this question, I think, in a couple of panels ago. Every fintech wants to be a bank and every bank wants to be a fintech. So if they, everybody's aspirations are different. So how can you treat customer security differently? I'm sure that you would have heard about the guidelines that the RBI came out with. And the cornerstone of that is customer protection and customer data privacy, right? Apart from other things as well. So if that is the cornerstone for not just for fintechs and for banks and everybody else, how can that be any different? And we take any and every kind of precaution, measure, products, technology, and try and secure it. Of course, there may be breaches, as you have seen across the globe, that something or the other happens. But I would argue that probably we are better suited because, our systems are completely, the manual work is a little bit less, and yet there is some data leakage that can happen. And we see that happening off and on when the minute you start getting paper involved in something or the other and document Excel files moving, data leakage can happen. But if it's more systemic, you can trace it back quickly. Like, she's telling us that, detection is clear, how fast you can detect it. So I think those are some of the things that, we spend a long time on, and somehow it's ingrained that is like basics. You have to do it. I don't think that we build our systems first for seeing what we can do, and then we think about that. I think that's probably the cornerstone of how at least tech companies are trying to build at a startup level. That's the way I think maybe Akshay can.
So actually, I have a very different approach to overall fintech and the way we look at business. I run, my name is Akshay, I run Fibe. We're the largest consumer lending app in the country. Most of the time, you come and when you look at a financial business, you question what is your AUM, right? Fintech by design is not meant to do AUM, it's meant to do velocity, right? I think this year we'll do more than 5,000 crores of disbursal on the platform, right? But the AUM may be, let's say, half of that. We're already mid-sized NBFC. We have all the regulations applicable to a mid-sized company. But the minute you change the ballgame to say, I want to look at my top-line disbursal and put my technology platform at par, suddenly you start talking about 2 notches above than you. You start coming and saying, listen, if I have $1 billion AUM, how will I treat my technology platform? How will I manage customers in a much larger manner? And how will I build protection for them in a much more systematic manner? The second is we believe that every 3 years technology changes and we have to destroy what we have built ground up. In fact, as on today morning, we rolled out our version 3, where we have destroyed every piece of railroad tech that we built before, which means that the new platform is far more stable. It's meant to handle maybe 20x customers and take us to the next 3-year growth. It's also meant to be far more secure. Right? It's based on a concept of conversational UI, which means that every new consumer is different, and every time I converse, I can modify my platform to cater to him, which means that if I'm going to move from a tier 1 to a tier 3 customer, while the experience is going to be extremely different for the two of them, the underlying platform has to be far more secure, has to be 3 notches better than what my current volume is. Right? Now, that is very tough to achieve. Platforms like us are pushing to say we want to be ISO certified. We need to be more than PCI. Right? When people question, are you PCI certified? Mostly only banks are needed. Lenders don't need to be. We said, no, we need to be better than a bank. We come and question what is the next level of certification because we impact more people than a traditional institution will do. We have now done 4 million loans. We have got 20 million people who have come and registered on the platform. By sheer volume, that's more than most of the banks in the country. Right? It's just that our app is a little, let's say a 20 MB product on the Play Store and people think that's our product. Underneath the terabytes of data that we carry to manage that customer seamlessly is our strength. Right? And giving stability of the platform where the customers know it is secure, partners who integrate to us, we work with many banks and co-lending, etc. They see us at par at their level, which changes the way the ecosystem gets built. You need to be the monitor in the industry. You don't need to be the laggard. Right? You need to set the standard. I think we really believe that the standard is ahead than a traditional institution. Look at yourself upwards of $1 billion and build your tech. You'll build customer protection automatically at the back of it.
Jeet, is it true that new age firms are better at handling such challenges because they're more nimble? Or are large corporations also catching up? Is there a convergence happening somewhere?
See, I think he just spoke about new technology being implemented every 3 years. Again, interesting, eye-opening, the way I think startups are looking, at technology, right? And the adoption, right? And for them, obviously, ensuring that customer is happy is what matters to them, right? That's how they are able to build their business. So obviously, yes, I would say fintechs are far more in terms of the adoption of security, not just because of the guidelines that we are seeing, but primarily because they have to ensure that the customer is satisfied at the end of the day. And the customer experience is not sort of getting hindered because of any issue. Or if they're, obviously the customer needs to believe in the product and also in the long-term value that they are bringing to the table, right? So I would say yes, for sure. I think startups are thinking ahead in terms of, especially the fintechs, I would say. They are definitely more adept at adopting, cybersecurity practices. Having said that, I think large organizations, depending on whichever industry they are in, I would say technology is far ahead. Technology sector is far ahead in terms of cybersecurity adoption. Banking has been traditionally, I think, adopting it well. Manufacturing is also getting there now. Primarily, I think the challenge with manufacturing industry is that If they have traditional OT, operational technology, which I think has been behind in terms of technology adoption, primarily because of the way the manufacturing works in plants, right? That's where you would probably see some, I would say, adoption being a little bit behind than the other sectors. But yeah, I think large organizations are also investing a lot in cybersecurity, not just in cybersecurity, also in training their employees on the benefits of do's and don'ts. I think that's happening on a regular basis.
Rajshri, any difference between large and small, or is it all the same?
That's a very interesting question, Ishan. I mean, the type of challenges that large organizations need to face is very, very different in terms of the legacy baggage that we need to carry. Whether it's a traditional bank that is trying to become a fintech, right? I mean, the strategy that they have to use is definitely different, from what Anuj or Akshay would actually strategize in their boardrooms. See, cybersecurity is actually a business problem. It is not an IT or a technology problem, and that is why it is a hot topic in the boardrooms. We need to get it right all the time, right? When I talk about a large fintech or a traditional organization, whereas the malicious attacker has to get it right just once. And with that, they are inside your network, and they can cause whatever damage that they want to cause to you. So in terms of a large fintech, right, I mean, we adopt multiple practices from a technology standpoint to make ourselves secure, whether it is network or data or application or whatever it is. I get asked all the time, right, as we start weaving security into our engineering practices, the question that is always asked is that, how can you be agile and release faster if you are adding more and more layers to your product engineering framework? I would say this analogy. Why do you think we have brakes in a car? It is not for the car to stop. It is to allow the driver to go faster with the knowledge that in case there is something that there is an obstacle on the road that he needs to stop, he can always rely on the braking system to stop him and save him. Similarly, very good security and good controls from a cybersecurity standpoint is to enable the business to go faster. It is not something that is going to slow you. You can go faster with the complete knowledge that the discipline and the process that you have put in place will save you in case there is a breach. You will be able to respond and recover faster and try to move in the same speed that you can. From an engineering standpoint, we do a lot of things as a large fintech to build security into our processes. So few years before, right, we were saying quality is everyone's responsibility. That is what we did as organizations started adopting Agile in a very big way to develop and deliver software more faster into the hands of the customers. Today, we say security is also everyone's responsibility. We do DevSecOps, which is weaving security into our product development lifecycle. There are multiple things like we adopt a red team, blue team approach where there are security champions, ethical hackers. They are part of the red team. They try to break into the application. Blue teams are the engineers who have built the system. They try to defend it. So that gives a completely different approach and a mindset. How security is very, very important to be woven as part of the life cycle, so that when you deploy something into production, right, it is not only defect-free from a functionality standpoint, it is completely hardened from a security standpoint also. Penetration tests, code scans, bug bounty programs where we encourage everyone to find out what is broken and we reward them for that. Hackathons where you can crowdsource ideas. So there are multiple things that any fintech can weave into their engineering lifecycle to ensure that what we actually deploy into production is something that is completely hardened and something that will be difficult to break into.
Ranjit, before I come to you, Anuj and Akshay, Ranjit, as I am to understand from the conversation till now, it's more ingrained in fintechs and new age enterprises and more a hygiene thing for the large organizations. Am I on the right track if I were to say that?
depends, right? The way you look at business. If an organization has been hit with a large ransomware attack, I'm sure the outlook will change, right? Because then it affects the business, then it affects the profitability, right? Then they learn the lesson the hard way, right? However, there have been organizations who have been proactive in adopting a more secure approach, especially, I would say, organizations who have a global presence and then who are into markets like Europe and US, where there is a lot more regulatory pressure. I think for sure, security is something that they would take it very seriously, right? However, when you look at more traditional organizations in India, like more small and mid-sized businesses, the approach is quite different because it's not that regulatory driven yet in India. While we are talking about privacy law, we are talking about cybersecurity guidelines. However, there is no huge penalties in terms of non-compliance. That's when I think typical mid or small-sized businesses, take it a little easy. However, when we work with clients of that sector as well, post an attack, the outlook is quite different. That's when they start thinking about how we should really embed cybersecurity in the overall organization, right? So it depends, again, as I said, on the stage in which the organization is, the market in which they are operating, and sort of what the regulatory landscape is.
Akshay, Anuj just talked about the RBI guidelines, which came in September, the digital lending rules. Now, from a policy perspective, is it more prospective or prescriptive in nature?
So I think it's actually much beyond that, right? See, it's always perspective. What can you do more? But this is the first time a guidelines is proactive to say how to build the business the right manner, right? It's come in very early. Usually you expect the industry to be a few $1 billion worth before you have such large guidelines coming in. It's given clear pathways of how to grow. It's removed any ambiguity in, let's say, next 5-year run of how to build a company, right? And more importantly, it's given clear pathways of how to structure your organization in the correct manner. What are the parts of the LSP and how he needs to store his data? How the RE interaction between risk, customer, and technology has to be warehoused separately, right? And how the two of them can coexist and build larger organizations. See, whenever the regulator puts clear paths, you've seen those markets expanding dramatically fast, right? We saw that with UPI, he coming out with very clear systems with NPCI backing. This is how you can collect payments in a better manner. We saw in LATAM the provisioning getting created for fintechs to acquire banks, right? We saw in many markets where banks becoming fintechs. The US is a good example. I think what's becoming important is the regulations are very progressive, right? While the fintechs find it tough to do because a lot of compliance work, a lot of effort, the FLDG systems goes away, the card goes away, etc. But what is left is a very clear black and white product. It's also given access to much larger capital pools. It's given access to co-lending in a very good manner. Today, if I look at the industry set to grow and become the $1 trillion, right? And I don't think it'll wait till the end of the decade. I expect the next 3 years the number to happen. The way expansion is taking place and the way guidelines are given clear path to grow, you will see companies now disproportionately growing because the customer confidence is fully secured. Customer exactly knows the regulator is backing these companies and he's giving clear path of how to set up your organization in the correct manner.
Akshay raised a good point about the compliance. Now, what happens to compliance costs here? They've been rising a lot. How much of an increase has been there in compliance costs since the new guidelines?
I'm not sure I can put a percentage number to it. But listen, it's not significantly higher. Let me put it that way. It's gone up, but it's not significantly higher where it sort of starts threatening business models. Maybe for a person who's just starting off, maybe that could be significant because revenues have not caught up. But somewhere in people who are in the mid stages of their life cycle, 5 years to 10 years, 12 years, in that range, for those people, I think their revenue should more than enough cover for increased compliance cost. There's a cost, there's a headache, that part notwithstanding, but it's not gone up to start becoming a business model threat, at least the way we see it. Somebody said, I think one of the one interaction that we had with the RBI itself, somebody said that, I don't remember who, you have to go, everybody has to go through that some little pain at airport security for everybody to be safe, right? So I guess that little pain everybody has to go through, and that cost will go up. But I think it'll be good for the industry at large. If I can, through this, save myself from fraud, which is a byproduct of this compliance going up, right? Compliance is also saving the customer and data and privacy and money laundering and all the other things. But it's also saving me, an organization, from fraud, potential fraud. Yet fraudsters still might be one step ahead of you, and that's going to save me cost. So if I start adding those up, maybe the compliance cost sort of balances out. So yeah, I think it's net positive, but with some little pain and little headache and little compliance costs gone up.
Akshay, if I'm to answer,
I've had co-found FACE. FACE is structured and looking forward for the SRO guidelines to get implemented for digital lending, and it's applying for the SRO. I think this is the first time the regulators actually come and said they should be an SRO for our industry. A couple of bodies have said that they want to become. FACE has been built for only one purpose. It wants to become the SRO.
so is it better to go the SRO route, start complying yourself little by little rather than have a big bang later by a regulator? Does that make more sense?
No, actually, that's not true. Let's just understand the regulator says what. Unless you're systematically important, I'm not coming and spending time with you. I put out guidelines, follow them, but I don't have the energy to come and service someone who does 5 crore, 10 crore, 15 crore volume, right? So that is where the birth of an industry body is, which helps people to set guidelines for self-regulation, right? And you saw that in mutual fund industry, we saw that in, let's say, micro lending, etc., where SROs came in to help put up simpler systems where early stage companies could come and follow. Right? That's what actually what FACE has also done. It's actually come and said, this is the right way of doing digital lending. This is the data which is not needed. This is the way your MIS should get tabulated and going back and publishing on a public platform. Right? When you put in simplicity, it's easier for early stage ventures to come and comply. When you're going to be systematically important, then the regulator comes and questions you. But there's a journey from starting from 1 crore a month to reaching 500 crore AUM. It's not easy, right? It almost, remember, unless you go and raise $30 to $40 million, you can't build a 500 crore AUM company. You need that much of capital, which is not going to be easy, which means that up to the first 3 to 4 years, none of these companies in fintech are large enough for the regulator to come and spend time on. Right? And this is the need for SROs, this is the need for industry bodies to help govern, help identify the good boys and the bad boys. See, we saw last year, August, September, nearly 1,000 apps were questioned in lending. They were all having Chinese origin. They had spurious lending platform. They were charging 1,000% interest rate, but they were small in size, right? If someone does, let's say, 50 crores a month, he's too small. The regulator will even take cognizance of him. But let's say the industry bodies quickly identified all such companies and said, these are all the bad guys, right? These are why they are bad. I'm identifying them so you can question their business model in one go, right? As the new guidelines are in place, it clearly now says what's the right way of running. Industry bodies, and see, the industry bodies are companies who participate, run those businesses participating. Right? We are not aliens to the business. We exactly know our problems. We know what is correct for us. We also know the minute we become larger, what we're going to face. Right? So we can then implement what works for us today and tomorrow in the right manner. You can't shift business models in 2 years' time. Just because I became large, now I'll become compliant. You're either compliant today or you're not compliant 2 years later.
Jeet, what's your experience with compliance and what are the best practices that are followed in this field, especially with rising cybersecurity threats?
See, I think, as I said, I think it's all industry-driven, sector-driven, right? Like some sectors are highly regulated, so you already have, like banking, I think, as I mentioned, it's already highly regulated, so it's not new for them to be compliant. I think they've already been traditionally highly regulated industry, so they would have already put measures in place in terms of security and privacy. So for them, compliance is not something which is separate. it's part of the business, right? But when you look at small companies or medium, small, mid-sized companies, that's when I think it becomes challenging for them to sort of comply with a lot of different regulations. I think one point Akshay touched very well was we need to have clear guidelines in terms of what regulation wants you to do, right? That's when it becomes easy for an organization to comply with the same. When it becomes more complicated, that's when I think, when there's no clarity, that's when I think compliance starts to look like a burden. And that's when an organization is not sure how do they really go about complying with this regulation. When there are clear guidelines, when it's clearly established what is expected out of a company, I'm sure I think compliance will never be a burden. I think it'll be more sort of adding to their business in terms of ensuring that they are giving better customer experience.
Rajshri, what's the challenge for an engineer with changing regulatory environment and with changing compliance norms? How challenging does it become for you guys?
It is, right? No one likes to go near the production gate to deploy, and then you get pushed back saying that, you did not think about this or you did not think about that. So that is a constant challenge for an engineering team before we actually put a product into the hands of the customer, right? I mean, the technology is emerging, the regulations are changing, and the customer expectations are also very, very volatile. So it does create a lot of frustration in the system, but nevertheless, as I told you, security is non-negotiable, right? I mean, the way I cannot put a buggy code into production, I cannot put a code into production which is going to invite malicious attacks into the network as well. So security is everyone's responsibility. So that is why we spent a lot of time, energy, and effort in training the engineers on the ground, right? I mean, once you start weaving security right from the initial stages of the development life cycle, and then it flows through, right? I mean, we start automating end-to-end. We are shifting left when it comes to building secure products. We do threat modeling, right, where we actually simulate what could be the avenues to attack into our system when the product is actually deployed into production. So there are architecture reviews, there are security champions. We reward good hygienic security practices. So there are a lot of things. You mean your employee is your first line of defense. And now with the pandemic pushing all of us into a virtual setup, and the new normal is going to be truly hybrid. So it is, making organizations to manage our security perimeter very, very challenging. I have people working from anywhere. They connect on any Wi-Fi. It could be a public Wi-Fi. They could be sitting anywhere and still accessing our systems. So, I mean, it is a constant learning, right? It is a constant way to evolve our controls and policies. So from your question on the engineers, I mean, we need to spend a lot of time in teaching them the need for security. It is a hygiene that can never be compromised.
Anuj, when we started this conversation, you introduced yourself and you said you're the co-founder of a neobank. Now, this is a question which is out of syllabus, but where is a neobank placed? We have a session on payments bank later. We have had private sector banks here, public sector banks here. We have small finance banks. Where do I place a neobank? And what is your audience?
You're talking like my investor here. But anyways, let me try and see if I can make sense of this answer. Mr. Amitabh Chaudhary said that he's probably the best bank in the world with the Google rating of 4.8. Sorry. And he's competing with us, right? So, I mean, I don't have the muscle to compete with him, but I'll try my best. But listen, everybody plays a role. 30 years ago, there were no private banks. At that time, the role of public sector banks was a little bit very localized. I would open a branch, you would deposit money, I would use that money, and then I would lend to somebody, and and then people would grow up in their life and financially grow, and so on and so forth. Then private sector banks came in after privatization happened. Mobile banking came in. The branches were air conditioned. Phone banking came in. ATMs were put up. There was a fight between HSBC and Citibank over who put up the first ATM here on the panel. So all of that happened. And now everything is moved to the mobile phone, right? So you have a, you can move mobile, you can move movie tickets, groceries, cabs, your dates, your restaurants, everything is on the mobile app. I want to sit here and transfer money to Akshay, and I should be able to do that, and I should be able to lend money to him if he needs it, and so on and so forth, right? So if everything is on the app and everything is in the comfort of my living room, why shouldn't money be as simple and as easy as that? And that's the bottom line of where neobanks play. Now, I'll answer a specific question on where the licensing part regime comes in, but I'm giving you a view of how the industry has evolved, and the second perspective of how the customer sees this, right? So the customer wants this, and that's how the industry has evolved. The customer wanted a better experience, so private banks came up with branches and mobile banking. Customer wanted everything in the mobile bank, so people came up with mobile banking solutions. Now, from a regulatory and licensing standpoint, everybody plays a role. Now, we all want financial inclusion, right? It's the government's goal to turn digital and financial inclusion. We want to go down to about 10,000 cities and so on and so forth. And the banks play a role. Then NBFCs came to deepen credit. Then the fintechs came, or the microfinance came. Then there was a small finance bank, and then there are fintechs, and then there are LSPs, and then you can just keep going down and down and down. And all everybody's doing is playing a role to expand the market as much as they can, right? And they are all playing a genuine role. And you could argue about data privacy and who works with an RE or who is a non-RE, and those are things that we will work out as an industry. Like the DLG is all, digital lending guidelines, all about that. But they all play a role. Likewise, a payments bank played a very specific role when it did come out. Now, many people actually returned their payment banking licenses. There are a few payment banking licenses, but they had some restrictions on you could not lend, right? Now, in India, and not just India, across the globe, 70–80% of monetization of banking comes from assets. Of course, you need the liabilities to generate the capital, but you make money via assets. So if payments bank could not do that, then there was a question on what else they could do, right? And that played a very different role at that point of time. And for Airtel and for Paytm and so on and so forth, and Fino, they did their job very specifically for very different reasons, for different use cases, right? And then there was a SFB which said that, I will run an SFB very localized, then I'll apply for universal banking, which is something a lot of banks are trying to do now. So I think digital banking is playing a role here where we are able to massify, deepen our engagement with the customers. Think about it. 65% of India's deposits sits in public sector banks. They are a great bank. They are powering the economy. There's a tussle between private and public sector bank. Keep that aside. But if a customer wants to be able to open a bank account, do the transactions, not have a checkbook, still get a card, still get an insurance, and do it at the comfort of home, not take a leave from the day and go to the branch and do it, I think that is going to take some time for them to do it. And if 65% of deposits sitting with public sector banks, I think those are my customers. So I'm not building a digital bank for maybe all of us here. I'm happy if all of you take it up. Please do. But apart from that, I'm going after the large 400, 500 million people out there. They are the middle income group people. They are the middle class of India who want better banking services. And the banking could be through deposits, could be cards, could be lending, could be insurance, could be wealth or payments. That's how everybody goes up, right? Everybody starts with a bank account. Then they want payments. Then they want cards. Then they want lending. Then they want insurance. Then they want wealth. That's typically how anybody adopts a financial product. So all of that is also true for a middle class Indian. But that's not available to him or her. And that's where we come in. I don't know if that's a too long an answer for your
The
question.
sales pitch should be marketed to that side, not to this side. This is just 5 people. Now, Akshay, let me sound like an investor to you as well. A funding winter is coming. Can we expect more partnerships with NBFCs and banks going forward?
So I think a little fortunate. We raised a very large round just a few weeks back, so we have enough capitalized for at least 25x growth. Right? It's a great space to be in when others may find it very difficult to raise money. But I think the color of the money has actually changed slightly, right? I think fintechs were like typical startups, and startups work with venture funds, and venture funds are like spoiled parents, right? You can point at a car and say, I would like that car, and say, if you're doing growth, go buy it. The minute money color shifts to a PE fund, you point at a car, he says, you want to go from point A to point B, take the local bus, travel there and come back. If you generated profit today, then think about coming back in a AC bus, or go back in a local Bombay bus only, right? So that's the difference between the quality of money which is now coming in. The difference also teaches us two parts, that there is a cash pool of money available as long as incomes can be generated. The second part is, with the new guidelines and the way the fintech lending is coming along, bank partnerships and access to lower cost capital is going to become a huge, I would say, accelerator to this entire category. At one point of time, most fintech people were borrowing between 16 to 20%. Right? That's not even NBFC rate of borrowing. The rates have actually fallen to 12 to 14% literally overnight. While borrowing costs in the market went up, access to capital pools suddenly overnight shifted to large PSUs, large private banks, large NBFCs. And which means that now the pockets are much more deeper. You'll find very large partnerships. Either you'll go behind, let's say, cards, and you'll do co-branded cards with banks where they provide the capital rather than you providing the underneath capital to a card. Co-lending will come along, which means you're levered 5x on day one. Usually when you early stage NBFC will do 2x, 3x levered. Now all fintechs will do 5x levered from day one, right? Which means that you have access to more capital, much cheaper capital, much longer tenure capital available. And as I said, if the industry is going to catch up to $1 trillion in 3 to 4 years and not 10, this new capital can enable that growth coming in.
Taking you to a rapid fire now, because we want to open it for the audience as well. And this is a question for all of you. We've got 330 million people on the mobile banking network already. That is what was announced today. The next 500 million are going to come in. You want ease of access for them as well as ensure cybersecurity as well. How do you ensure both? Because these are the guys that are also very vulnerable to cyber attacks, to making mistakes, losing their money. Ranjit, if you can start with that. Akshay, actually.
Maybe I'll start, because we face every consumer every day, right? There is no difference of people sitting in this room. If any one of your ID gets hacked and someone takes away money versus the lowest end villager sitting in some other town, right? Remember, the reputational risk for one customer being hacked on I would say any company is equivalent to 1 million people. The noise is equal. One guy got hacked or 1 million guy hacked. The news says you are hacked. Right? So security is like railroads. You create it to last for every customer, right? It's about your experience play. The consumer who is in a metro-centric audience is very different versus the consumer who may be a villager. His expectation, answering questions, capability will be very different. On the other hand, if I ask him, is your account linked to Aadhaar, the chances are 5%. In a village is 100%. His subsidy comes on it, he'll perfectly link it, which means you can onboard a person sitting in a small village in less than a millisecond. You can do his KYC, you can onboard him, and you can start the lending decision. While to him, I need to invest in him uploading some Aadhaar card, him doing some photograph, forgetting to mask his Aadhaar card, spending almost $1 to do his KYC compliance, right? It's a very different atmosphere. As you go down the pyramid, the railroads are far better. It is just the customer may not need that access at that point of time, or he finds it, I'm not used to it. It's a habit. Today, UPI is accessible to everyone, right? Where did you go when you bought grocery in any part of the country and you paid cash? There's a QR code even with the smallest person available. That is what mass products are available. You'll see that in lending also. You'll see that in financial services. Across board, as you enter Tier 3, Tier 4, Tier 5, access to digitization is far better, easier, and expectation on security is exactly same as South Bombay.
Ranjit, what is your take on it?
No, absolutely agreed with him, right? I think it's not about how you are able to build both. One is accessibility, second is security, right? You need to actually understand the customer need. Does the customer really need it? Then obviously he will come to you, and whatever process he needs to follow, he'll follow. Whether he needs to give his KYC, whether he needs to give his Aadhaar card, whatever he needs, he will do that, right? It's about how you're able to get to the customer to attract him. Security is something which organizations will have to anyway worry about, right? Whether they are giving service to 10 customers today or 100 customers tomorrow, it's the same process. You have to have security embedded in your overall organizational strategy. So how fast you can get to a customer, get him access, at the same time you need to protect his information. I think that's something that you'll need to think about, which obviously I think technology is something which can play a greater role here, because the more you're able to adopt to technology, the quickly you'll be able to get to those customers and service them appropriately.
Anuj, as a neobank, that's a challenge also,
Sure.
getting the new ones on board.
Yeah, I think, I don't think I can add too much more to what these two gentlemen have said, because, you can't delineate the two. You can't compromise one versus the other. I'll give you a little bit of an anecdote. Sorry, maybe I'll take a little bit, maybe a minute longer. When we were starting out about 5-6 years ago, we were going company by company and setting up our stalls there and showing our product to people and saying, hey, do you want to take this? And who the hell, nobody knew who we were. At that time, we were called Money Tap. Who are you? Which bank is backing you? I don't trust you, and so on and so forth. And we would go to large companies because they had the population there, they had the income there. So we said, that's the right place to go. And we said, we should try out other markets as well. So we went to a factory on the outskirts of Bangalore, where the income was a little bit, the income profile was lower, factory workers essentially. And we said, we'll give you 50,000 rupees. And here is what you have to do. So, of course, we had to handhold them from a perspective of English language and so on and so forth. But we said, we'll need a banking statement. They, on their own, all of them, stood in front of our guy there and started giving their username and password for the internet banking. Yeah? So they started saying that here is my username or customer ID number and here's the password. And our guy is saying, please stop, I don't want this. You cannot give this to me. Now, the need for the two was the same. One guy was very, very discerning about his or her data. One guy was not very discerning about his data. And that is the reality, right? We talk about privacy, and like Ranjit mentioned, right? You'd give a mobile phone number the minute you walk into a mall. So there, how come your privacy and some of those aspects don't come about? But as businesses, we can't differentiate between the two. We have to treat that guy who's giving his mobile number at Inox malls the same way to that person in a small town or a factory who wants to desperately get 50,000 rupees and yet is ready to give everything, whatever you want, to a slightly more discerning customer saying, I have this credit card, I have that credit card, why should I take why should I give you this data, and so on and so forth. So I don't think that you can delineate the two. Growth does not come at the expense of security. As a business, you cannot do that. The customer expectations might be different and you have to deal with that as you go along.
Rajshri, your thoughts?
See, digital adoption is here to stay. Cloud migration is here to stay. And cyber attacks are also here to stay. When you take one step forward, the attackers are taking 10 steps forward. Cybersecurity is not about threat elimination. It is about measured risk-taking, right? How well can you learn from what has happened and how you can harden your processes and controls so that you recover faster when something happens in the future. So I think, whether it is the next 500 million coming into the digital adoption world, so I think the journey has to go. So cybersecurity is not a destination, it is a journey, it will go on.
Any questions from the audience? Oh, quite a few. Let's start with the lady up front. Can someone pass her the mic?
Good evening, everyone. My name is Lavanya June. I'm a student. I'm trying to figure out a lot of things. And with this insightful view since morning, I have a question. Gentlemen spoke about the velocity and the AUM. Now, when we talk about, sort of balancing it out, when we talk about the money supply, when we are talking about the velocity. Now, does it mean that low velocity also kind of talks about the contraction and the recession in the economy? Having heard, the governor speaking about the decoupled, how, the sector is measuring how they're contributing towards controlling the recession which had, taken place in 2008 per se. Our economy is well, as we see that a lot of improvements have been made. So coming from this sector, like what would be your contribution largely when we are also talking about, we are also considering the, the legal point of view and the other regulatory aspect per se.
Economics student? Yeah, thought so.
It's a tough question actually, but if you look at the perspective, see, India is today's Indian internal demand is maybe protecting us from a recessionary pressure, right? It's actually a very fortunate situation. If you talk to anyone in the West, there is severe recessionary pressure. In fact, they're saying post-Christmas, chance of losing jobs are very high. Right? In India, no one is questioning that model. Right? I was telling the panel just before this that in January this year, we had 250,000 people who approached us for credit. In November, we had 2 million people in a month. It's 8 times higher demand. Right? We're not equipped to handle that much demand. It's huge, right? To really gear up to handle pressure like that of consumer demand hitting you. So I would say India is in a two-part situation. One, I think it's the most regulated market and a very progressive regulator. Right? He's prepared us to face the tough battle. Second, we have hardened from the NBFC crisis, the banking crisis, and the COVID, and we've just come out of it. Right? See, I would say we are like those old ambassador cars today, right? They were so bad. The roads were so bad, the car had to run whatever it had to do. Right? We just recovered from that. So the roads are now meant for really nice big cars. So we can still survive in whatever comes our way. Right? The third part is, I think the recessionary pressure is not going to hit India that severely. We may see slowdown in growth rates, but we don't see any negative growth rates coming in. Right? We still are poised to see many industries, especially financial services industries, at double-digit growth rates. Right? Which means that it's a great place to be. Our job is to cause more impact. Right? There are many of our businesses that we do are people who have never got access to money from banks. Right? They are fully banked. Not a single customer of ours does not have a bank account. Right? But bank's ABC costing doesn't allow him to get a 50,000 rupee product. And that's why models like ours survive. But if I look at 70% of our customers have never got a credit card. It's the oldest known, it's a 40-year-old product. How could he not got it till now? Right? So opportunities exist. I think we are well prepared for it. The regulators are protecting the way industry is getting built. Consumer sentiment is extremely high, right? And I don't see recessionary pressure hitting financial services in India in the current wave. We have to survive the next 8 months well. I think we are well poised for it.
Any more questions? The gentleman here.
I am Hari Belawat, TechFin Consultants. This is regarding this security, cyber security. See, we have developed our own systems and, you have developed your own, entire transaction, every systems. Now hackers, are they more technologically advanced and how can they enter in your system, without this? And what is their setup generally? How do they do it? Is it a few individuals are the hackers or it's a few organizations which are the hackers? If you can highlight those things, it will be of some use to us.
Thanks. See, attackers will continue to attack, right? I mean, there are multiple reasons why we have a malicious actor or an attack into our networks and systems. Earlier, it used to be for financial gain. Now it is for a social agenda or to just make a point known that they are actually capable of attacking you. There are individuals who do it. There are organizations who do it. There are groups that does that. There is political backing in some cases. And emerging technologies is a two-edged sword, right? I mean, the way it makes our systems better, it makes us to deploy better solutions faster. When it gets into the hand of a malicious player, I mean, they are going to exploit it to ensure that they create as much damage, to a financial institution or to a bank or to a fintech. So I guess it plays on both ways. I mean, for example, AI, artificial intelligence and machine learning, I mean, it helps technology companies like us to, to come up with better and faster solutions, more rich solutions to the market. But the same AI can also create deep fakes, right? I mean, it can actually help you, to get conned when it is used by a malicious player. Emerging technology is a two-edged sword. I mean, we just need to decide which side of the paradigm we are going to sit upon.
One last question. The person at the back.
Hello everyone, I'm Santosh Kumar Jai, I'm the CTO of Xeron. So my question is, since the security threats are rising, what are the three most important factors that you look for while maintaining the security of the entire applications, the lending process and everything?
Should I try to answer?
Yes, yes, please, please.
So I think very valid question. I think as you're building up the platform, most of the time you're going to be attacked on two parts. One is the node points, specifically which are open to anyone in the network externally, right? So that's where you spend a fair amount of time to plug in your node points. The second is internal, external. See, many of the time we forget that the employees may have access to some data. How do you eliminate PII data from your internal system completely, right? That's a very important point, right? Even if the underwriter should not be able to copy any data if he has to do a screen underwriting for the end consumer. The third is, as you build organization in the beginning, you may not implement everything internally. You have many third parties who provide some amount of system work with you, right? He may provide the lending management platform, he may do the collections work for you, he may be a third party call center. How do you plug in the nodes which go and empower his systems? So these first three come into your picture before you become larger, where you manage systems at, let's say, server level integrations, etc. So they are the first 3 points that you spend time in. As long as you're protected here, the chance of you having early stage hackers coming into your picture or open nodes available to public to look at data is protected.
Thank you.
We can take two more questions. The lady in the front in the pink was asking a question on the side.
First of all, thank you very much. We have gained a lot of knowledge in this session. What I wanted to ask is there any kind of SRO, like Akshay sir was saying, that is already working on sharing the hacking efforts?
Can you recall an SRO I'm sorry, can you repeat?
Like any industry-wide effort that's already going on for sharing hacking efforts on fintech apps?
No, so I think, in fact, Face has set up a small tool. It powers maybe 20 lending apps where we share the fraud details in runtime. So for example, if I am hit with a fraud and I'm able to say, yes, this customer is fraudulent, I can inform the next app in the runtime atmosphere saying if you are getting this, let's say IME or mobile number, he may be fraud. Right? So there's a fraud repository built, but there's no hacking repository currently available.
From the best that I can answer, RBI asks banks to report all cyber attacks. Some of the organizations are also asked the same, that they report their cyber attacks. And you have to report those attacks to CERT. If your critical infrastructure, there's an NCIIPC, which is a critical infrastructure body that you have to report attacks to. So that gets reported there. Ranjit would better know.
So I think not just banks, I think CERT has mandated every organization to report any cyber incident within a certain time period, which is 6 hours in the moment they come to know about the incident. So I think it's for all the organizations.
One last question. Yes, please.
Hello, my name is Wahid, and I'm from a slightly different field. That's an edutech field. My question to you guys is, as technology keeps on changing, and as the topic is technology in banking, why don't you introduce something as a training concept or something for students in college or maybe a higher standard students so that they can understand the technology in banking, because economics and banking is such a sector when we are in school, it is just like a very different orbit for us. But once we come into the picture, maybe an MCOM student or BCom student, then he starts understanding the economy. So why cannot you guys, as you all are in the forefront of with the technology and the two in banking, can you all start something like a training sessions for the youngsters so that in the coming 5 years, those students can, again, they can be your employee or they can run a startup with a new technology, if you can.
Yeah, see, that's a brilliant question. Actually, it is happening in a very big way where a lot of large fintechs are tying up with academia as well as early stage startups. So, I mean, from my standpoint, I mean, we are working to come up with a course on fintech that will be introduced as a curriculum. It is work in progress, so I'm not able to tell you with which academic institution we are working on that. And we also run, hackathons where we call students from the academia to work on real world challenges, real problem statements for which we are seeking answers for. So that collaboration is already happening, whether it is with academic institutions. But again, from an academia, I mean, we deal with universities or college students. I mean, I have to agree that we are not working with the high school or higher secondary school students, but nevertheless, I mean, that collaboration is very, very strong. And as fintech, we get lot of innovative ideas from grounds up, from the college kids and from the early stage startups. So that collaboration, I mean, is a very, very important, source of ideation for us. And curriculum building is also happening. So we will get to see a lot more strides being made in that, in terms of, proper fintech-related curriculum, for computer science students or for other students in the universities very soon.
In the morning, former chairman of SEBI, M. Damodaran, was here, and he said in regulation you have a question that you ask, how are you playing catch up? I think if we are to have this discussion again, my question would be the same, how are you playing catch up? With that, I'd like to conclude. Thank you. A round of applause for our panelists.